The secret of success, of course, in doing business in the United States, doing business in China, is being nimble. And so we've asked our panelists to be exactly that in terms of go ahead and we've shuffled around a little bit. Mark Horn of East West Bank.
Thank you. Chung-Li Shin.
Chung-Li Shin of ZTE, Zhongxin. Then we have we're moving around a little bit. Ken Wilcox of Silicon Valley Bank. Then we have Mark Greenfield of Blank Rome. Apologies for the feedback there. And finally, Kenneth Petrilia, I'm sorry if I butchered your name, Ken, of Wells Fargo. Please welcome our panel. Thilo has gotten us off to a great start talking about issues of motivation, what are the big trends, which sectors have received the most investment, how much of the richness has come to California. We're very happy to hear all those things, of course. But what we'd like to do now is drill down a little bit. Each member of the panel has vast experience in either bringing companies here, bringing investors to acquire companies, startups, all sorts of things. And so here we're going to be looking at issues of motivation, what sorts of things are happening at the ground level. Now everybody, of course, reads about some of the giants, but truly the giant in this room, represented in this room, is ZTE. And so we're extremely fortunate to have Chung-Li Shin here to talk about his experience establishing this large, not just handset manufacturer, but telecommunications giant. He made one mistake, he located in Texas. But that's just a personal opinion. And so if the other panelists...
My home is San Diego, California.
Good choice. I'm a San Diegan as well.
Oh, good.
The other panelists will be speaking about specific examples as well in other sectors, but I wanted to ask Mr. Chung, I wanted to ask him, China is the largest mobile market, this gigantic market. Why bother coming to the US?
Yeah, good question. So glad to be here. So if I answer this question, I have to show this phone. This is in my hand. This is the latest phone we launched to US market called Boost Max, and we launched in January. And this is the best-selling phablet we ever had in the United States. So with this phone, it's a good example to answer your question. So with this phone, of course, it's Android operating system from Google. And inside, it's a Qualcomm Snapdragon chipset process. And then Broadcom Wi-Fi module, right? And the glasses is from Corning, Gorilla Glasses, which is US company again. So those are the very good example that why we want to be here, because we want close to our technology partners, right? Another thing is we want close to our market, because US is the strategic important market in the world, and also the biggest consumer market still today in the world. So we want to be close to the market. So ZTE started investing in here since '98. So we have invested more than $350 million to funding our own R&D, our market development. So today we have 14 offices, 5 R&D centers, and 1 distribution centers employ more than 300 employees. 85% of our employees are local hiring, either green card holder or US citizen, and only few expatriates we get assigned from China. So we also not only actually selling here, we are also buying a lot of US goods back to China and sell worldwide. So during the last 4.5 years, we have spent about $17 billion with US companies for the chipset, paying the license for RP. And we also, we call that our success, ZT success, is attributed to our ACW business model. So A stands for American innovation, C stands for Chinese engineering and supply chain, and W stands for worldwide market. So we working with the US innovative partners and integrate that into our products and manufacture in China and sell worldwide. So we believe that is a win-win-win situation. So I especially thanks to Asia Society and also Rhodium Group. Dan is a close friend. They did a fantastic job to provide a objective view about these things, for both sides.
Well, and I think the advertisers, the marketeers in the audience will appreciate the product placement that you managed to work in. But this is a great example, right? And this might be a good reason to live in San Diego, to be close to Qualcomm, Broadcom, and all of these California companies. It's an interesting special effect. In any case, so we'll come to the talent question, because you've hired more than 300 employees, 85% of them from here in the United States. We'll come back to this talent question, but let's see if we can bring some of the other panelists in, because they have quite a variety of expertise. We have people who have specialized in traditional Silicon Valley enterprises. We have people with expertise in energy, people who are looking at biotech and these other fields. And so let's see if we can pull out from them what they have learned. What are your customers coming for? What are they asking? What needs do they have that you think you can satisfy or you have satisfied by helping them to invest here in the United States? Maybe we could begin with you, Mr. Wilcox.
We work with exclusively with technology companies, as you know, and most of our technology company clients in China are relatively early stage clients. They're looking for a variety of things in terms of their interest in the US. They're clearly looking for investments that will result in advancing their knowledge base in technology itself. So not, as some people might fear, buying technology, closing companies and taking it back to China, but simply buying technology, companies with IP and learning through that process. That would be one motivation. A second motivation clearly would be, in many cases, although this applies more to our larger clients and less to our smaller clients, would be opening the US market. And I think that many Chinese companies are already making inroads in that regard. And the one that comes to mind, most to mind quickly, for me anyway, is WeChat, because we have about 100 people that in our office in China that use WeChat, and now I'm finding out that there are, not only do we use it every single day, but there are many, many companies that we work with in the US where all the employees are using WeChat to communicate with each other. So a second motivation is obviously expanding markets. And a third motivation is China has an unbelievable amount of capital right now. And although one seldom deploys capital without a strategic interest as well, there is the very basic need simply to deploy capital in useful ways. And the US is seen as a very a good opportunity for lots of entities and individuals who have a lot of capital.
Okay, so when you say deploying their capital, it's a productive investment, it's a relatively safe investment. What do they say?
It's both of those.
Both of those.
And it's also a question of diversity. There's a question of, I think, economic diversification from a geographic point of view.
Thank you. Mr. Greenfield, maybe you've worked with folks in gaming, energy, these sorts of things. What are your partners saying?
Yeah. Well, we have the very interesting strategic opportunity at Blank Rome to work the China investment angle from both sides of the street, if you will. So we're representing outbound China money into the United States to make investments in US companies and projects. But at the same time at Blank Rome, we're also representing US-based companies that are the recipients of China investment and helping those companies better understand what it would be like to have a foreign source of investment, China in particular, as a partner. We're seeing, more than anything else, a shift in a trend. There was a period of time where there was, and there still is to some extent, and I think reasonably so, a concern on the part of the United States that US technology was getting knocked off by patent threat and patent theft. And we've had an active practice at Blank Rome in China protecting patents of US companies. But I think that China has realized that that's not a good end game. It never was and it can't be. The intellectual resources in the United States are too strong, and the human assets in the United States are more worthy of the investment than the actual patent technology itself. So the shift of money in the report that you heard from Rhodium with $6 billion on the table in the first quarter of this year, looking at the intellectual assets of the United States in the form of high tech is something that we're seeing more and more of. At Blank Rome, we're seeing it in the energy industry, money coming in traditional oil and gas and alternative forms of energy, investing in the technologies that are rich, the way to harvest solar energy or wind energy, or even harvesting traditional hydrocarbon sources through hydraulic fracturing. Investments in medicine are ripe. There are tremendous advances, as everyone knows, in medical technology, medical devices. We have a very active practice in the generic pharmaceutical industry, and there's a significant amount of money coming into the United States interested in drugs and molecules. So I would say that would be a sum of what we're seeing from the legal side of things in terms of trends of outbound China money inbound into the United States.
One of the striking things in the most recent U.S.-China Business Council survey of its members in China is that some 40% said that they'd seen greater efforts made by the Chinese government to enforce intellectual property rights and to do that sort of thing. And that might be part of what you're speaking to. Now, they said somewhat, they didn't say all the problems were solved,
Well,
but that's a step forward.
That's a very interesting observation you make. We're a long way from having great harmony in the two cultures and in the two economies, to be sure, but this is the beginning of what I would suspect would be a much more symbiotic relationship between the U.S. government and the China government to make these investment trends much more practical and I would hope much more reciprocal.
In terms of IP protection, if I may.
Sure.
So, for Chinese companies, as the survey said, more and more care about protecting and respecting IP. Is that for the sake of us? Because, for example, ZT, we invest 10% of annual revenue, 10% every year back to R&D. So from 2011 to 2012, according to World Intellectual Property Organization, and ZT ranked #1 in the world in terms of patent applications worldwide. So just ahead of Panasonic, which is a Japanese company. And 2013, we are #2, Panasonic's #1. So you see that we are the positive force driving the IP protection, in China, also worldwide. It's for sake to protect our own investment, right? And I think that's very important perspective I want to share with everybody, because China, during the last 30 years, now we become also a lot of innovation. And also we are doing business in 160 countries. So we have 18 R&D centers, most in China, but we have 5 in US and also 3 in Europe. So all over the world. So we are part of the global innovation. So this has to be, considered a positive force, for the globalization.
And this has long been the expectation put forward by legal specialists and others, that as China's own intellectual property blossomed, it would be anxious to protect us. This has been seen in other emerging markets in East Asia, prior to the China case. And so ZTE needs to protect its assets just like Apple, just like everyone else. So that's an excellent point. Now, before we go to the other two panelists, I wanted to just ask about hydraulic fracturing or fracking, because that's what I hear from Chinese of all sorts, that they're very anxious to acquire this technology and improvements, because of course we've seen an energy revolution take place in this country where we've become to produce much more of our own needs, that sort of thing. And of course China needs to increase the efficiency of energy use and get more out of the ground. I don't know if you've been working with people specifically on this.
Well, the energy industry is an industry I've been involved with for almost 40 years, including a stint away from law as the CEO of an oil and gas exploration company, and we were doing fracking 30 years ago. Fracking is not new. But there have been tremendous technological advances in the way that hydraulic fracturing can be performed, and the way that you can blast into a formation and open up something like a shale deposit in areas like Pennsylvania, North Dakota, Texas, even in Monterey County, California. Although I think that may be the last to be developed because of environmental concerns in California. The technologies are very ripe. And the technologies have been developed in the United States because the opportunities for the development of the shale formations were the ripest in the United States. So China has invested substantial amounts of money in energy projects, and that's a trend that will continue, but a trend that has been in play and has been continuing for several years. And to answer your question, the main thrust of the investment is not only as an investment opportunity in the United States, but also to learn from the United States exploration and production companies about this technology and then take it back to mainland China.
So that's definitely an aspect of it, but one of the reasons I mention energy is it goes against the overall trend. As is made clear in the report, the investments overall, FDI coming into the United States, and especially in the high-tech sector, have been from private firms. And of course, the energy sector in China is dominated by the state-owned enterprises. And so that may represent a different, maybe we can come back to and talk about environmental technologies that may be related to some of this. Mr. Petrillia, you're now with Wells Fargo, have been for a very long time. Wells Fargo has changed, and your assignments have changed along with that. Now, what is Wells Fargo doing on this front? Are you following your customers, or are you finding new customers?
Thank you. Well, that's an opportunity to do an advertisement. I won't do that, but I will say that, yes, we're a different bank. We're an unusual bank in the sense that we are headquartered in San Francisco as opposed to New York. We are now the largest bank in the world by market capitalization. We have historically, and I think this is probably what you're referring to, historically we've had a very modest, if not non-existent, international ambition and a minimum cross-border exposure. But that's changed. The world's changed. It keeps shrinking, and our clients demand that we help them overseas. And of course, that's not just China, that's everywhere. So as a result of that, we are suddenly a much bigger bank internationally with a network around the world that we didn't have before. And in China is a big topic of conversation all the time. If we listed the 20 countries where we're the most active or want to be the most active and where our clients are, our top 5 would include China, so we're doing things there. Going back to your earlier question of Mr. Wilcox, what we're seeing is that we have a much more general approach. We're doing things in technology for sure, but a little bit in biotech as well, but a lot in real estate, manufacturing, agriculture. What we see a lot of this way, foreign direct investment, is clients and prospects asking us for introductions and prospective acquisitions or investments that they might make. Given our size and exposure in the United States, they see us as a fertile source of ideas and opportunities who might be available to either invest in or acquire. So that's one thing that we're seeing. And the second thing is...
Anything we should be looking for in the headlines sometime soon?
Not that I can tell you. And the second thing is that when the Chinese come here with an investment or an acquisition, they need banking services, and that's something that we want to do. So there's a lot of stuff that's not necessarily sexy. We want to provide operating accounts and foreign exchange and treasury management and those sort of things. But it's the whole gamut from China, not just technology.
Thank you. We turn now to East West Bank and Mr. Mark Horn. One of the things that's really striking, the report uses very large companies, right? Focuses on very large investments. And it also filters out a lot of companies that might be producing, that might have a high-tech component. So for example, in the report, you'll see a list. The hospitality industry is on the not included side. But it could be that there's really high-tech applications there. And you've been doing business with a lot of smaller firms, firms that may not be grabbing the headlines in the national news, but are making a big difference in local communities. I was wondering if you could talk a little bit about that.
Sure, I'd be glad to. So at East West Bank, I spend most of my time working with technology companies across the country, but in the Valley, which is where my office is. I spend a fair amount of my time working on the private equity side, working with the venture capital firms and the drivers of investment, earlier stage investment into some of these companies. So from the standpoint of companies that are included in the report potentially, but what we're seeing and what I see is in inbound investment from China into technology companies, some of which are very, very early stage, may not even have a product yet. So we're not seeing the investment for technology acquisition yet. Maybe a year or two down the line, and maybe the investment is a small dollar amount to get the foot in the door, potentially, to sort of reserve your spot to look at the technology. But we're also seeing investment of rather small dollar amounts, $2 to $5 to $7 million, in companies that actually have technologies. But the inbound investment is from much larger companies in China looking for complementary technologies that they can lever their products with. And I'm very glad that the report has brought out that a lot of these investments are for expanding markets. Right. It's about building the bridge between China and the U.S. For many decades, the investment, as the report points out, was flowing to China. Now there are a lot of companies in China that are not just producing products, they have their own products and they're looking for distribution channels. And so the opportunity to make investments in companies here, to open the door and create a partnership with these companies to allow a bilateral flow of not only products but also the technology.
Can you give an example of one of these firms?
Sure. Without naming any names, a very interesting company that's been in the Valley for a long time has an interesting technology. It's not a new technology, but a large Chinese corporate through an M&A firm in China has taken a look at the technology, and through partnership with not only the company but also the private equity firm and the large corporate in China, is actually in the process of buying controlling interest in the company for the reason of the technology, but also it allows the Chinese corporate access to the existing client base of a technology that exists. So there is application for the technology in China, and it is a very unrelated company in China that's making the acquisition. So they're looking to actually expand upon the purposes and the uses of the technology. But these are not huge transactions. These are not billion-dollar transactions. They're in the tens of millions of dollar transactions. But it just shows you that Again, in the report, the numbers of transactions, if you look, is in the tens per year. It's tiny. We're in the very earliest stages. And so we're seeing both in the US and East West Bank in China, smaller investment dollars into what we hope is going to grow into not tens of transactions, but hundreds or thousands of transactions at the lower end of the range to grow into much larger opportunities.
Oh, that's great, thank you. Now, at the University of Southern California, we have more than 3,000 students from China, Chinese passport holders. And they study everything. They study film, they study history, they're concentrated in business, they're concentrated in engineering, okay, these sorts of things. No surprises there. Nationwide, there are 250,000 students from China right now, learning all kinds of wonderful things. And many of them would like to stay in the United States. But some of them would probably like to work for ZTE. Maybe send their children to a school in California or Texas or someplace like that and breathe California air rather than going back to China to work for ZTE. Let's talk, if we could, a little bit about talent. Now, you've opened up all these R&D facilities and have brought in talent. Some of those folks may be Chinese, but it sounds like most of them are not. Now, what were you looking for, and what portion of ZTE's research and future innovation is happening here in the United States?
Yeah, so I talk about in terms of patent application and investment, we go to R&D and for the innovation from ZTE perspective.
Well, that's company-wide.
Yeah. So
what portion from the U.S.?
So a lot of those patents actually is written in the United States by our R&D engineers in those R&D centers. So we have many actually patent firms helping us to file those patents. So that's very clear. So why we investing here again? We believe, as Theo mentioned in the report, is really the talent you have here. And also the legal framework you have here, in order, for protecting the IP, and also particularly the culture, the education system you have is really, bring a lot of innovation. For today's high tech, particularly in our sector, ICT, the most big things is still invented in the United States. We talk about, cellular phone, we talk about optical broadband, wireless broadband, we're talking about also the other things, the next generation of the internet and internet of everything. So it's literally it's here, and there also you have rest of the VC's capital is well developed, and today's panel we have 3 bankers here, so it's a lot of money here also to facilitate this kind of innovation. I think that's why that from talent point of view, we like to invest in the United States in terms of R&D and innovation. But to answer your original question, I think that's another challenge for the United States, Washington D.C. It's really the immigration reform, because today, if I want to hire a fresh graduate student from university who does not have a U.S. passport, I cannot do that, because H-1B and the visa is a quota. It's only 60,000 per year, and I think it's very difficult for us to do that. So as a matter of fact, and we didn't hire a single such kind of fresh graduates until today. So most of our hiring is really from the industry that who has experience and have a good knowledge and in this industry.
Yeah, I think a lot of people, certainly probably the people on the panel, would like to see that sort of change to make it easier for talent trained here to be retained here. But maybe we could talk about the talent consideration that investors might be looking certainly for the technological side of it, but maybe also the managerial expertise, knowledge of distribution challenges. I wonder if you could say something.
I think
about
you're
that.
on a really important point, and although you said a lot about it, I'd like to add just a couple of additional points. I think, first of all, we should not forget that if we look at the 50 years or so of innovation space development in California, both in Northern and in Southern California, that a large part of the innovation that has been brought to bear was actually coming out of people that were born in various parts of Asia and probably predominantly China. So it's been a large part of our past, and I think that we tend to forget that. I also think that having spent a lot of time in Washington visiting with people in the House and in the Senate and talking about these issues, I think that there's a great deal of misunderstanding in Washington that many of our congressmen have it backwards. In other words, they think that we should not be keeping people that come from other countries and go to our graduate schools in our country because they're allegedly taking jobs away. They also tend to think that all of them want to stay. And actually, it's the other way around. Number one is we have a very large shortage in the innovation spaces across the country now of adequately trained people in the hard sciences, because we just don't have enough Americans, people with U.S. passports going to our graduate schools in the hard sciences. So contrary to what many people in Congress think, we need people from other countries desperately in order to fill our jobs. They're not taking jobs away, they're filling empty holes and adding to the potential for growth in the job market because they're creating jobs.
But Ken, you know, you live in Silicon Valley, you know, what's the abbreviation IC stands for? Integrated, you know, Circuit, but actually it's India and China.
That's right.
So it's India and Chinese actually, you know, doing all this design work for the high tech.
Exactly. And I think also many people in Congress think that everybody that comes here and goes to our graduate schools wants to stay. That's increasingly not the case. Increasingly, in my experience, we see steady flow of people that graduate from our graduate schools in the U.S. coming back to China, filled with pride in the recent developments in China and wanting to contribute.
So this subject's going to come up on the next panel, kind of the barriers and some of the impediments to advancement. But if we could focus a little bit here on what Mr. Chung was talking about, the attractiveness for a company to come and invest. And one of the other things highlighted in the report is the vast number of greenfield investments, right? Coming in like ZTE and creating something that didn't exist. But there have been some acquisitions for the reasons of getting this technology, this sort of thing. I was wondering if we could talk about getting that talent, not just the technological talent, but the managerial talent.
There's definitely a shortage of managerial talent in China. There's absolutely no doubt about that, although that is rectifying itself because even in these past couple of years, new MBA programs have come into existence. And so I think that that's changing. But at the risk of annoying you by not talking about what you've asked, I think there's one other thing that we need to mention, and that is, it was already said that 250,000 students from China are now in the U.S. Do you know what the number of U.S. students in China is?
A fraction of that.
A fraction of that. China knows a lot more about America than America knows about China. And that's something that we should be encouraging young people to go study in China. It's a very interesting place, and the more that they learn, the better off we all are.
I guarantee you haven't annoyed me because we are in the China teaching game at the U.S.-China Institute at the University of Southern California.
Well, if I, however,
Please.
could key off the question, I would share that while the panel is basically focused on investment in technology, if you think of management talent as a part of a technology, the absence of the management tools in China is attracting China dollars to the United States so that the Chinese investors can send their talent pool over here to work with the U.S. companies in which they are invested. and learn about management systems, skills, and techniques, and then export those learned techniques and skills out of the U.S. back into China. I think that is one of the drivers of the outbound China dollars.
And if I could add to that as well, that's certainly one of the benefits. You know, when we talk about companies that need capital, capital is capital. But what a lot of companies are looking for, whether it's inbound investment or it's capital that's already here, is once you have the capital, what else do you get with that capital? Do you get access to talent is one of those things where companies here take capital, but it opens a conduit to get people from China, management from China, even technical talent from China here to see operations here as a result of opening that channel, which helps the company grow, getting capital, financial capital, but also intellectual capital and managerial capital as well.
And we can see that in terms also of managing innovation, how you create an innovative company. Mr. Petrilli, I wonder if you'd like to address
Well, I would say this is
the 7 questions that are now on the floor.
No, it's very interesting. I'm interested in the geopolitics of all of this, and talent is part of that. And I would simply add, not disagreeing with anyone, it's much more complicated than that because from my perspective, with the wealth that's been created in China in the last 30 years, there are clearly a lot of parents that want their children to study in the U.S. and stay in the U.S. So notwithstanding Ken's comment, which I would agree, you know, some are going back with a lot of pride, but part of the equation, if you will, is that there are a lot of Chinese studying here who would like to stay. So it is a complicated or many-faceted problem or issue.
We have a lot of people with a lot of ideas and hopefully maybe some questions. So we turn to the audience. We don't have a lot of time left in this panel, but we have a question up front. Is there anyone else? Okay, we'll try to get this. And actually up in the front, please. Up here. Yeah, right here. Thank you.
Good afternoon,
It's
afternoon, ladies and gentlemen. My name is Zhang Yue. I'm from World Journal Chinese Daily News. I have a question to Mr. Chen. Do you think what's the significant and the biggest difference to doing business in United States and in China, and how do you adjust it? And the second question is, as the slides that show that more and more Chinese investment to the United States, and do you have any suggestions to this investment, and what lessons you could tell them? Thanks.
Thank you for the question. So actually, you know, I have been during the last 26 years, I have been doing business in more than 58 countries. So I receive this kind of question a lot, you know, to what do you see the difference? Yeah. But actually I see a lot of common things, you know, we are all human beings, and then we are all looking for different, we are all looking for same interest. So I think fundamentally it's the same. But what's the difference is that because I have a model, I say, you know, it's you have a culture or the way you grew up, so you have a belief and a culture inside, nobody can see it. But you also have a behavior, which is most people see appear on the surface. But between the behavior and the belief is your attitude. So the difference is really between the different attitude. And so I think that's the big difference, you know, fundamentally it's the same. So more specifically about China and the US. So that's, you know, again, remind me that, you know, in early stage of my career, I was working for a European company and helping them develop business in China, happen also in the telecom industry. And now, you know, I'm head of a Chinese company, you know, for North America operation and develop business for a Chinese company in the United States. So it's quite interesting to see the challenges, you know, from both ends. Actually, it's the same set of issues, right? but the way of handling that is different, right? So, and for example, in U.S., no matter, we talk about challenges and barriers, in the next panel, but nevertheless, the U.S. has the best legal framework in the world today, and transparency. So one example, in the last 12 months, we have won, 3 ITC cases. So what that means, all the cases are ITC, lawsuit against ZT, we win all of them, 100%. So think about that, if you're familiar with ITC cases, if the ITC judges say, you violate certain patents, so our products will be embargoed from selling in the United States, imported in the United States. It will be disaster for our company. But we manage that, that we win a lawsuit. It's, of course, fundamental is that we didn't violate any patents from others. But the key is you see that the legal system in the United States, it works. And no matter, what kind of political, sentiment about the Chinese companies, but the judges, the legal process here is really focused on the fact. So I think that's a very good example, we're sharing here today. And advice, should I stop here?
Maybe we'll save the advice.
Okay.
Maybe we'll save the advice for barrier crossing. As it happens, Shujie Ribao is in this news business, right? This industry. But as it happens, Shujie Ribao is one of the more innovative companies with its iPad app and these kinds of things. It's trying to find new markets, new readers. We had a question in the back, and that hand has disappeared. So maybe okay, right here, please.
Hi, hello. My name is James Penn. I'm from University of Southern California, Marshall School of Business. My first question is to Mr. Chen Lixing. Now, as many Chinese companies, when they enter U.S. market, they pursue merger acquisition strategy. Given Lenovo is one of the examples, and also Huawei has tried to attempt several merger acquisition in the past. Now, ZTE take different approach. Now, can you share us why you make that decision? When you decide to enter U.S., you decide to go with the greenfield.
Yeah, why greenfield rather than merger?
It's a good question. So ZT was founded back in 1985 by 7 engineers. So the leading founder of the company, Mr. Hou Weigui, and he has academic background, and he's a vegan. So that's tell you a lot. I talk about attitude and belief, So Mr. Hou is very humble and conservative person. When he started the company, he has a vision. He wanted to provide affordable communication tools to everybody. So, and then he also took a different approach that instead of keep as private, so we went public back in 95 in China and lately in Hong Kong, 98. So we're a public traded company. And so as a matter of fact, 18% of ZT owned by Western institutional investors such as JP Morgan, Fidelity, SunTrust, and Deutsche Bank. So maybe some of you, your patient investor over there. Buy more ZT, by the way. So we'll help you to appreciate your investment. But so because of this kind of background, so we cannot afford to have any, limbo in this kind of investment if we fail. So because of our culture, so we are being more conservative and cautious. So we are more focused on organic growth, because we actually has a lot of opportunities, and appear to us. To be honest, I receive emails, at least 2 or 3 deals come to my email box every day regarding all these deals. It's very attractive, but we are afraid we cannot manage this. And of course, we have already got a lot of collateral damages during the last few years, particularly after 2010 and 2011, as you know. Yeah, and also, of course, Lenovo is different. Lenovo is actually in a different kind of industry, so less sensitive than telecom.
They're coming into yours, though.
Yeah, so this is good. So I think So I think that's the answer to you. So we, being a public traded company, we have to be very careful about what we are doing in this marketplace so that we will not damage the benefit to our shareholders. And secondly, it's really from our culture and the way the ZT is operating. We rather working as a partner with our technical partners in the United States. For example, ZT is the first Chinese company signed a license agreement with Qualcomm back in 1999 for the CDMA technology. So now we are the largest vendor of CDMA technology worldwide. So, and this is one of the examples. So that is, I think we will stick to that strategy for quite some time in the future.
Thank you. Thank you for those questions. We have to wrap up here, but just one quick question for the panelists. They all represent very well-established companies, large client base, huge number of offices in China, in the United States, quite a talent pool, bankers, lawyers, all of that sort of thing. Is there a role, or to what extent have you appreciated the role played by institutions, be they government agencies? So for example, we have represented here in Los Angeles, the Shenzhen Municipal Government has an office, we have the Hong Kong Trade Development Council, we have other entities that bring in investors from Jiangsu looking for technology. What has your experience been, and this is the final question, what has your experience been in working with these often publicly funded entities that try to bring partners together?
I'll start. I think it's an important ingredient in the equation. When I first took this job, I didn't realize how much time I would have to spend with those kinds of organizations, because in the U.S. we tend not to do that. It's a little bit more, you're on your own, different kind of entrepreneurialism. So I would say it's a key factor and an important factor and it's taken into consideration.
In our case, we've had some very good experience in working with these kinds of governmental agencies with early stage companies. The big base of our law firm has been companies that are in the middle market, and a large number of our middle market clients weren't always middle market, they were early stage, and we grew up with them. We like working with early stage, and when we have governmental institutions, be they US or foreign, that are looking for ways to attract early stage opportunities to the US or from the US, and they create opportunities for us, they are agencies that are a pleasure to be working with.
Well, first of all, it's absolutely necessary because the way the capital markets and the entire economy is structured in China, these agencies play a very key role. So first of all, it's absolutely necessary. Secondly, I think that we need to go further than we have in the past in order to help them understand how they can interface with the American economy in a way that will be beneficial to them. Because in the same way that when American companies go to China, it often takes us several years before we understand the role that government plays and can figure out how to work effectively with it. Chinese have the same problem coming here, it's just in reverse. And we need to go out of our way to facilitate.
Great, thanks.
Yeah, I would second all of the panelists' comments by saying it's absolutely critical from an information flow, certainly, at the base level, but also, I would say, from a cultural understanding position. The more we get to know one another, the more we understand one another, and I think that that is maybe an indirect benefit of working through so many of these types of agencies.
My advice to Chinese companies, actually, you should use to that, because the reason why is, of course, different, country has different systems. And more importantly, US has a well-developed professional service sector. Mm-hmm. So Chinese company, when you come to US, you should willing to invest and pay for the services rather working with the government, because that is the best way for you to working with the professional services. That is your back door, that's your shortcut.
Different views, but all, of course, out of tremendous experience. I think we've been very fortunate over the course of, 50 minutes or so to hear from some real experts in this field. I hope you'll join me in thanking them.